Okay, everybody, it is me, Gregory Mannarino. It is Sunday, January 30th, 2022. This is my newest segment of Markets A Look Ahead. Sit down, get comfortable, lots of things going on. As a matter of fact, I'm sitting here this morning trying to, again, put together all the pieces that are currently in play, and there is a lot. Trying to, again, come up with the most likely outcomes for the market, and everything else connected to it. So let's do that. Let's kind of put this all together here. So before we look forward, people, we got to look back just a little bit. That will set the groundwork for what we can expect. It's pretty simple. Number one, number freaking one, this market is not crashing. All right. I understand that people are not used to seeing what they are seeing right now. Normal corrections don't seem to happen anymore in an abnormal market. But still, you have to realize that even though the market is beyond twisted, it is beyond distorted, it's the truth, certain things must occur from time to time in any asset class. And with regard to the market, we've had, again, last year, just a month ago, more record highs with regard to the S&P 500 in history. We've never seen anything like it before, despite economic shutdowns, deliberate, despite an economy in free fall. Nothing seems to get in the way of this market. So again, the market needs to pull back, correct. I've been screaming about this for months. The market needs a pullback. The market needs a correction. How many of you have heard me say that? Now, finally, we get a corrective phase. And people are freaking out. And I know where it's coming from. It's the other so-called, YouTube experts. Every week there's going to be a crash. Every month there's going to be a crash. They don't know what they're looking at. Again, they're not stock market experts at all. What they're trying to do is get you to watch their channel, all right? And what better way to control people than by propagating fear? Me, I don't propagate fear at all, okay? I want you to understand what's going on and how to take advantage of it. It's all about control, even from the mainstream media and many YouTube bloggers out here who are only concerned about their bottom line, and that is getting views. Look, my take on this is if anyone has a YouTube blog, they should come out here and tell the truth, because people know the truth when they hear it for the most part. But if people are going to buy into the fear that this is it, this is the big one, well, what are they going to do? Of course, they're going to get people to watch their video blog, but they're going to be misleading people on an epic scale, like most of them have been doing for a very, very long time. Month after month, year after freaking year, and they've been 100% wrong. Yet, some of these people have bigger channels than mine. They have a larger following than I do. And people keep on watching them as they get destroyed. They could have been capitalizing on the biggest bull run in history. But no, they've been told to stay out of this market by these so-called market experts, some of them not even in the market. So you explain that to me. Imagine being a stock market expert, okay, but at the same time, letting themselves and their people miss out on the largest, biggest bull run in history. How does that work? Maybe one of you can explain that to me. Anyway, so looking back here at last week, so what happened? People, if you've been following this blog, this really was troubling me for a while. Why did the Federal Reserve not even nudge rates higher? Talking about the federal funds rate, even a fraction of percent if our economy is booming, if they really want to combat inflation, and it's all dog shit anyway, because no matter what the Fed does with regard to raising rates, it's not going to stop inflation. See, that's the big lie, that you and me are being fist-fed. The world is being fist-fed by the Federal Reserve, who's determined to continue. Let me say this a little more clearly. continue to inflate, okay? They're going to tell you all kinds of bullshit. They're going to distract you with all kinds of fancy talk about tapering. There's no taper. There's not been a taper. You don't believe Greg Mannarino? Look at the Fed's own balance sheet. Go to any search engine you want to, Federal Reserve balance sheet, and go look at it over the last few months. It's gone parabolic, despite the fact that they said, oh, they're tapering. They're not tapering anything. And they're going to continue to inflate. You know, it's kind of interesting. So we have heard from the Fed, oh, yeah, we're going to raise rates. It's coming, everyone. Get ready. What's missing, for the most part, from this narrative? Well, how much are they going to raise rates? And is it going to be 0.5%, 1%, 2%? I know there's all this chatter, and I think Fed President Bostic was out recently talking about possibly, 0.5%. That's what we're going to do. Look, just like their 2% target with regard to inflation, which we overshot by multiple hundreds of percent. We are now about 7.3% according to their own numbers with regard to inflation. And you think that's it? You really do? How about no? How about no freaking way are we done? And you all know that too. Anyway, so look, this market is not crashing. All right, this market is in a normal corrective phase. Something I've been saying for months needed to happen. It needs to happen here. And it seems that people are buying the dog shit. How many of you trust a single word that comes out of the mouth of the Federal Reserve, the Federal Reserve chairperson, or a single Federal Reserve president? I don't believe one of you out here, not one, who has at least a functioning brain, believes a word they say. They're public enemy number one. They're all about lies and deceit. And that mechanism is going to continue. So anyone who's buying the nonsense that the Federal Reserve is going to meaningfully raise rates and that is going to combat inflation, you don't know, again, what you're looking at or talking about, and you're buying the dog shit, the buckets of dog shit that are being fed. I've been telling you a lot lately about how people are being fed buckets full of dog shit, and they're told to eat it and lick it clean, and they're doing it too. You got to be freaking kidding me. I don't know. I don't know where these people come from. I have no idea. I wish I knew. So anyway, on the back of the Fed's failure to act, what happened? Exactly what you and I expected to happen. The stock market fell. Oh, believe me, I know that there's a lot of YouTubers, the professionals out here, the real pros, the market experts saying, oh, if the Fed didn't raise rates, the market's going higher. Duh. Make it up. Make it up. Nobody who understands this market, nobody, and I know that's not you, believed for a nanosecond that this market was going to go higher on the back of the Fed not raising rates. If the Federal Reserve did raise, forget about it. This market would be off to the freaking races right now. But again, what did I tell you recently? I had to figure it out. And I understand why the Fed did not raise rates here, even though the market was clearly pricing it in. See, look, the Federal Reserve, they watch this stuff just like you and I do, all right? If you and I realized clearly that by the Fed not raising rates, the market would fall, believe me, the Fed knew it too, okay? The Fed realized that the market was pricing in a rate hike. Yeah, I know not many people were talking about they're going to do it now. In fact, I might have been one of the only people saying it. But the market was pricing it in, and that made it clear to me that had a rate hike not come, the market was going to fall. Let me say this while we're on that topic. If the Fed fails to act by March, let's just say, if they don't raise rates, this market will crater. And I mean crater, because that might be enough to trigger a big sell-off in the debt market, which is going to be the precursor for a massive stock market crash. Okay, right now, the drivers of this market remain intact. The 10-year yield, stable. The yield curve, not doing anything that would alarm me at all or raise a red flag. Okay, what was troubling to me, and I covered this last week, was that knee-jerk higher in the dollar, the relative strength of the dollar, which continues to die. Its absolute strength is dying. I told all of you, I don't know how long ago or how many times, that the relative strength of the dollar, in other words, the relative strength of the dollar versus other currencies would remain high as the dollar continues its free fall. Okay, inflation surging because dollar is in a free fall. That's how it works. Period. The end. You all know that. And inflation, we haven't seen a damn thing yet, and I think you all are very, very, very well aware of that. All right. So with that said, this morning I'm writing some stuff down here. So looking back again at Friday, we had a lot of institutional buying here. If you noticed, every time this market's taken a big hit, there's a lot of buying going on. And that isn't the average guy and the average girl. These are institutions that are buying this market. And my theme has been buy the dips for freaking years. And that has, let's be honest, for me and my Lions, that has put a lot of cash in our pockets. In fact, more than I'd like to admit. But, look, I'm trying to enlighten people as to what's going on, take advantage of it. If they don't want to do that because they believe the other experts out here, the ones that have kept their people out of the biggest bull market ever in history, oh yeah, you keep following those people and let's see how this all works out for you. It's pathetic, it really is. Anyway, so I want to bring a few things to your attention here that are very, very important in our look ahead. If we understand, all right, again, let's set the groundwork. Let's set the groundwork here. That easy money is not going to stop. If you believe it is going to stop, well, then you got to tell me why you believe that. You really believe the Fed is done? You think the Federal Reserve is going to stop inflating right now? Or do you believe the Fed is engaged in probably the biggest scam on the face of the earth, and that is buying everything with an asset that they create out of thin air? Because they want to own it all. They want to be the lender and buyer of last resort. I think that you are clear on that. Again, they're in the middle, or actually the end stage of a wipeout of the middle class and a destruction of the economy. Again, the Federal Reserve, along with other central banks, must keep the global economy in free fall so they can continue to inflate and become the feudal freaking overlords that we know they want to be. You understand? Okay? Everything else is just nonsense. With that said, we are in a normal corrective phase with regard to this market. And we should be, I don't think as cautious as we were, because I think we're out of the woods here with the market. So we will continue to execute our strategy, which is buying the dips, betting against the debt, becoming our own central banks, holding anti-debt units, physical gold, physical silver, my favorite, and yes, cryptocurrencies. Now with cryptocurrencies, let's move on a little bit here. I believe we're going to see a lot more volatility because of all the regulation talk. Okay, it's continuing. Remember, there is not a single really member of Congress that wants you to be outside of the Federal Reserve System. They need you in the beast system, in the debt-based system that is run by the Federal Reserve. Henceforth, why, you got these creatures crawling out of the woodwork. Oh yeah, we're gonna, be regulating cryptocurrencies. Our president retard. Oh yeah, executive action on cryptocurrencies. Again, which are not units of debt. You own them. Okay, there's no issuing central bank, and but you can't be in that. You understand? They don't want you in gold, physical gold. They don't want you in physical silver, nor do they want you in a cryptocurrency. They want you in the beast system, so they can win. Okay, and that's not where we want to be. We want to be outside the central bank run, controlled system. You understand? I think that should be pretty evident to you. While at the same time, we can use their system against them. That's how we win bigger. Again, the stock market makes no sense. We all understand it's hyperinflated beyond belief, And if you've been in the market for as long as I've told you to be in here, buying large cap dividend paying stocks, like I said earlier, you've made more money than you probably want to admit to your friends. And that's the truth, but I'm not afraid to admit it. I have made, well, a lot of money in this market. And I'd be willing to bet my Lions have as well. Look, and it's not too late for you. You could still get in on this if you want to, or you could listen to the other people who are calling for crashes every month. You choose. Anyway, people. Now, a couple of other things that I think are really important. There's a few things in play right now that are kind of coming together. I want to bring this to your attention with regard to energy. Okay, we've seen energy prices go freaking out of control, and I mean literally out of control. But no surprise to you, because I told you this would happen. Now, it looks to me, and again, I don't pick tops or bottoms in this market. I don't do that. It's a loser's game. But it appears to me that energy should correct relatively soon. We need to see this, in my view. And what would that do? Again, it would set up for something terrible, but it is going to happen. A correction here with regard to energy prices. I'm talking about crude oil, which would, of course, affect the entire energy sector, natural gas. The entire sector needs to correct. And what that will do is set up for a much larger move higher. Now, I am not saying to short energy here. You want to get fancy like that? Go ahead, do it. Some of you are going to make money. A lot of you are going to lose money. All right. I don't play that game. Okay. Again, I am not in that business of picking tops and or bottoms, but I am telling you that we need to look for some kind of a correction in energy. Now, with that said, if we get a correction in energy, in the energy sector, crude oil, natural gas, over the next several weeks, and we do get a drop, pay attention to what I'm telling you here, okay? If we do get a drop here in energy, what that's going to do as the financial sector has had a correction lately, and I told all of you this was coming. If you follow my newsletter, go check it. I said watch for if we get a pullback with regard to the banks, financials, that we should be buying that dip. Well, think about it. If we understand that the financial sector is dependent on energy, if we already have this drop here in the financial sector and the banks here, and energy corrects, now energy will correct and then pull them both higher. So I believe, at least, we should be looking for, over the next several weeks, a correction, pullback in energy, which will then meet with financials, which will go up together. So I expect to see, again, correction in energy, which will lead to a move higher. Banks, financials have fallen pretty substantially. Will they fall further? They might. But again, we've fallen pretty precipitously as of late. I believe we're going to see a meeting here between energy, financials, and they're both going to take off together at relatively the same time. So a massive opportunity is, in my view, developing, and it's going to be epic. In fact, I think it's going to take a lot of people by surprise. We understand, look, it's not just Greg Mannarino, it's investment banks, it's hedge funds saying, $100, $125 crude. There's even calls for $250 barrel crude. I don't know about that, but I would say, $100 is definitely, going to happen. It's just a matter of when. And if we get this drop or a pullback or a correction, corrections are bullish. Corrections are bullish. Let that sink in your head. Corrections are bullish. Corrections are bullish. Okay? And I think we're in a normal correction right now. There's no sign of a crash, in my view, because the real crash is going to start in the debt market, not the stock market. The stock market goes up, stock market goes down. The debt market is doing nothing but inflate. And at one point, it's going to deflate on an epic scale. And when that does, it's going to change the financial landscape of the freaking world. And I think you all know that. I want to bring one last thing to your attention. I have mentioned here that I believe this whole Russia-Ukraine issue is nothing more than a U.S.-Ukraine arms deal in disguise. I covered this yesterday in my free newsletter, which I did send out to all of you who do subscribe, and I got a lot of very positive feedback off of that. So I want you to pay attention to what I sent out in my free newsletter. If you have not signed up for my free newsletter, it's not too late. There is a link in the description of this video, and you can go check out what I wrote. It's pretty astonishing what's going on over there, and it really does look like nothing more than some kind of an arms deal that's going on. We've already sent over to the Ukraine in just the last few weeks hundreds of millions of dollars in weaponry, and they're not done by a long shot. It's hundreds and hundreds more millions are going to be sent over there too. Nothing is what it seems to be, people. It really isn't. But I mean, keep this in mind, and I also think you know this, that war, the propagation of war, the movement of weapons is the business of government, along with fear. Make people afraid of something, and you can control them. You can do anything you want to. And that's exactly what they are doing here. All right, people, look, kind of a long video, covered a lot of stuff with you. Let me make sure I got it all down. I want you to think about what I said real quick with regard to energy. All right? Look for some kind of a correction to occur. And when that pulls back, it's going to meet up with the financials, and they're going to rise together. And I think it could be a substantial move higher, big move higher. And the whole market, again, after this correction, because that's all this is going to move substantially higher. Expect new record highs in this market. And it's not too far off. So again, capitalize on this. Take advantage of what's going on around you, everything. Nothing's going to get by you or me. You understand? All right. I'm out of here. Love you a lot. Please share the video, comment here, and I'll see you in the morning.